So let's get more insight into Ireland's debt restructuring. I'm joined live from London by Julian Callow. He's Chief European Economist at Barclays Capital. Julian, thanks very much for speaking to us. Good to see you again. So is Ireland on the verge of a bailout?
Well, it's only getting very close to that position, it would seem. I mean, when you have bond yields that are now moving well above 8%, this is incredibly difficult for the economy. They have to get those bond yields down one way or another. Either they can really convince the markets and there's going to be a great rally and they'll get those yields down, or they're going to have to use the European financial stabilisation mechanism really and have the IMF. Of course, Ireland is very resistant to that latter idea. It has uncomfortable memories of IMF involvement in the past, and it doesn't really want to be under pressure to raise its corporate tax rate. But it's simply unfeasible for the economy to go on like this, having bond yields at 8% when nominal GDP has been contracting very significantly on a year-on-year basis.
So what you're saying is that this level of debt is not manageable. We've been speaking to the Irish Central Bank Governor, Julian. I don't know if you heard any of the clips from that, because, I mean, he's been saying that these soaring Irish government bond yields are essentially down to sort of older concerns on, you know, investor concerns on older data, that it's exaggerated, essentially.
Well, I don't myself see so much sign that things are getting a whole lot better in Ireland. I would have to say, from an economic perspective, we don't yet have the Q3 GDP numbers, but I'd be surprised if they were particularly positive there. Ireland, if you strip out the financial bailout this year, Ireland's underlying budget deficit will be about 12% of GDP. It's planning fiscal consolidation of 10% of GDP over the next 4 years, of which about a third of that is due to be delivered next year. But we don't know the details. And this is one of the issues, that Ireland is trying to stick to its schedule for releasing its budget. And there still seems to be wrangling going on over that at the political level, given how narrow the government's majority is. And in the meantime, the market concern wells up. And clearly, there's not a lot of transactions going on in Irish government debt at the moment, so quite marginal flows can have an impact there. But the markets just don't have the visibility here, and that is the concern. And a lot is going to hinge really on how well the economy is going to be performing in the next few quarters in the face of that absolutely massive fiscal tightening. And
very briefly, Julian, what about the German plan for sovereign debt restructuring? What do you make of the timing of this German intervention?
I mean, it's highly unfortunate. I think Berlin is very keen to have some kind of mechanism in place to accompany a permanent financial stabilisation mechanism in Europe from 2013, which would entail putting some potential risk on private bondholders. It regards that as a big omission. Yet, because Germany is telegraphing very much, very vocally, its views at this stage, it is, of course, contributing very significantly. I think it's really urgent here that Europe comes out and delivers some messages of support and really emphasises very, very clearly to financial markets that this is not something that Germany is pushing for imminently, that it's very much part of the post-2013 framework, and it's only even then, it's just more of a possibility rather than an actuality. And really, it's very important that European institutions, as urgently as they can, get together and come out with some messages to support, because you can see the way these markets have been moving. It's become very unstable in the last few days.
Yep, Julian Callow, Chief European Economist at Barclays Capital. Good to get your thoughts.